welcome to What the Frac. We are your fractional team, and today we break down marketing trends, strategies, and tactics in 30 minutes or less so that you can do the fun stuff like be creative. Well, welcome, Tamara. I am so excited about today because we were just talking about this, we very rarely get someone from the fractional CFO side of things in here. And I know that business owners are just, they dread it, but they know they need it. They need that help. Oh, yeah. And one of the cool things is that John, our guest today, has been a fractional for over a decade. So like you're a pioneer of fractional work. So we get to also pick your brain about that, the evolution of the industry, where it's going. So Nicole, this is going to be a great conversation today. And so first off, John, thanks for being with us, but I'm going to introduce you because I think everyone needs to hear the background of how amazing you are. So John Frank is the founder and CEO of Third Road Management, a fractional financial services firm established in 2014. Third Road Management partners with small and mid-sized organizations across diverse industries, providing strategic financial and operational expertise to growth-oriented businesses. Before founding Third Road Management, John held various roles in corporate finance, investments, and operations, giving him a holistic understanding of the business lifestyle. Your passion for entrepreneurship, your passion for financial and understanding how financial and operational expertise just is a crossroad that most people don't get. How did you get into this space?
Oh, man. Yeah. Well, first of all, thank you guys for having me on. It's an honor to be here, and I hope I have some insights to share that will be helpful for you and your audience. But you kind of mentioned to this, but I kind of came up more so through, the investment arena. I started out at Arthur Andersen doing M&A due diligence work. And then that transitioned into the leverage finance space. So I was underwriting loans that were largely being used for leverage buyouts. So kind of in that private equity community, but more on the lending side of the equation, pivoted from there to go work at a Wall Street firm where for 6 years I traded distressed bonds, in particular structured products and CDOs and subprime that were very newsworthy from 2007 to 2013 when I was doing it. So learned a lot along the way, and I was at a crossroads career-wise, and didn't know what to do next because, that by 2013, that trade was, sort of gone in the market, and I didn't know what to do. I didn't know if I can go back into leverage finance after being out for 6 years. Ended up doing a total 180. My wife and I had been, I guess, not founders, but some of the first people at a startup church out here in the western suburbs of Chicago that some friends of mine had started. That we were the first 40 people there. 10 months later, there's 500 people coming in every weekend, and these pastors didn't know what they were doing. They didn't know how to run a business. And in a very I now look back at it, it was a very fortuitous way. I quit my job on Wall Street to go work on what we then called, it was then on Lake Street in Bloomingdale, Illinois. We had just had our third child. We sold our home. That was like our dream home kind of thing. And that was my first time running a business, right? So I was kind of responsible for everything, associated with running the business. And it was there that I started to have friends and family that were business owners start to ask me for help on the side. So this is going back into April of 2013, I think was the first family friend that gave me a call. I was happy. Obviously, I had made a gigantic career change, and with that came financial implications. And I started to help out on the side, and I was just grateful to have the extra money for our family kind of thing. And the business that I was working with at that time was a commercial printing business. And in 10 months' time, it had gone from, a very dicey situation, 6 times leverage. The line of credit was maxed out. He wasn't making any money, all those kind of things. That 10 months later, the line of credit was paid off. He had no leverage and was cash flowing very well. And I told that story to another friend of mine. And 3 days later, he called me and said, "Hey, John, can you come help our family do that same thing with our business that was completely unrelated to the commercial printing business. And so I started doing that work as well. So two side projects, if you will. And then it wasn't, maybe 6 months later that I was sitting on my porch and I had the aha little pink umbrella moment where I realized that these businesses are literally everywhere. Like you get in the car, you drive down the highway, you look left, you look right. They're literally everywhere. And I'm like, I've never heard of a business that was designed almost like the Bain or McKinsey, but for small to mid-sized organizations, right? And I'm like, that's it. That's a thing. And so, Third Road Management was officially born legally in October 2015. So we're celebrating our 10th legal year, but we've been doing it for 12 or so.
That's Tamara, I was just going to say that, like, we've heard so many times the best business ideas come from just helping people in the community. Like, if someone comes to you, a friend or family, and they have a problem, and then you solve that problem, and then the next person has that same problem, and you solve that problem. And I just love this story because I feel like it's so, I think that any small business can relate to what you've been through and your background. Sorry, Tamara, I didn't mean to jump in.
No, that's a good, well, you had a kind of a different takeaway. I got really stuck on, John, one of the things that you said when you talked about the turnaround of this business, right? And we hear that a lot, especially when a business needs to maybe go into talks about selling or scaling, right? And a lot of times you think, oh, for that business growth, you need marketing. But sometimes what you need is someone with a really strong financial plan in order to make sure that the business is on solid ground for anything that they need to do, which actually turns them around. So I'm curious what you can talk to that a little bit, especially for small business owners or startups that need to kind of readjust their perspective on how important the financial aspect is versus just we normally talk marketing and growth, right?
Yeah.
But it's not always the case.
Yeah.
How do you get these businesses set up for success? And what is kind of that lens that you say, well, this is how we get you to grow?
Yeah. I think context is important there. I think people in like tech startup world, might disagree with some of my commentary here about on the growth side of the equation. But like, I think a broad brush would be to say that not all revenue is good revenue. Meaning at the end of the day, if you're out there hustling and, bringing in, all this revenue, but at the end of the day, you're not making any money. It's like, what are we doing here? Like, then we got to get back to the fundamentals of like going as far back as we can is like, is this a viable business? Right. Because if a business can't make money, or develop enterprise value or something like that, right, it's really not worth it. So I think, some of the biggest things to look at are, what is the way, that this business is currently positioned, right? And how can we position it in a perhaps different way, right? That will help the business thrive in a multitude of ways, right? Obviously there's the revenue side of the equation. Okay, how do we grow it? And we're not the subject matter experts in marketing and things like that, but I know enough to be dangerous and call people like you that can help them position those businesses for that, right? And then, there's all the things about systems and process and technology, like how do we make it go faster, right? And at the end of the day, if it's not generating a profit or increased profits for that matter, we have to have a different conversation. But to me, there's an adage of, what gets measured gets done. Or KPIs are the, smallest number of battles you need to win the war. And most often, if you can assign some key metrics to different areas of the business that are the smallest number of things that you can do to win in that area of the business, and everybody's accountable and everybody knows what those things are, it's a really, good way to turn the knob, so to speak, in terms of everybody rowing in the right direction organizationally across, the different areas of the business.
I'm curious, just really quick, what do you think a good profit margin is? Just kind of a general, if you were to say, like, you need to be above this in order to really think that this is a good, solid plan.
Yeah, I think most people would point to pre-tax 10%. so after all your cost of goods sold and your operating activities, on the SG&A side, I tend to think that that's, a little bit more industry specific. I think, manufacturing, distribution, things like that, tend to be a little bit lower on the margin. I think that if you're in professional services like we are, I think that those margins should be better than that. General rule of thumb, I think in professional services, for example, is gross margins, I feel like should be in the 50%-ish range. I think as you get bigger and scale, that's obviously going to come down. So a, 10-person law firm, the economics of that firm might look way different than a 500-person law firm. You know what I mean? And so, that 500-person law firm, maybe their gross margins are more like 40%, right? But it's all relative. And I think early on, it's important to, test out the viability of your model based upon, what the value of your service is in the marketplace, what the cost is of doing it, and then is there enough margin in that business to pay out overhead and still generate a profit?
So, I'm going to make two statements. The first one is about fractional, which I think is going to be weaved throughout this entire conversation. And the second one is going to be a question for you, John, that I want to stay in the financial part, but I don't want to lose the fractional. So the first statement is that this is the exact reason that I think fractionals are really important, because if you talk to a financial person, you talk to a pure marketer, you talk to someone who doesn't understand the holistics of a whole business, they are going to tell you very stat oriented or execution oriented answers, right? And they're going to think about finances. They're going to think about marketing in that siloed kind of thought, right? And that's fine. That's fine for in the weeds. That's fine for the day to day. That is fine for executing. You need that. But when we're talking about strategy and we're talking about thinking about your business like an executive in the big picture of things, how are we going to get from 2025 to 2030,
Yep.
right? You need to be able to see those siloed pieces of your business in a bigger vision. And I think the people who go into fractional work have had so much experience in all of the pieces that they can then take that specialty and really implement it into the bigger vision of your business. And that's what takes you from a small business to breaking through those challenges to that next level. Would you agree with that?
Yeah, I mean, 100%. We, the way that we talk about it is we say there's 3 F's, right? So, and it's all finite stuff, right? You have a finite amount of dollars to spend, right? And with that, there's a finite skill set, right? So in finance world, a CFO's skill set is different than a controller's skill set, and a controller's skill set is different than an accountant's skill set, right?
Mm-hmm.
And the challenging thing there is that you can't get an accountant to be a CFO or a controller to be a CFO, right? And a good CFO doesn't want to be an accountant. They don't want to do the debits and credits. They want to think strategically about things, right? And so it's this conundrum. And I think that the way that businesses have historically solved that problem is they're like, look, I've got this much money. I'm going to get the best person I can for this amount of money that we can spend in this area, which they, in the case of finance and accounting, they typically underinvest in that area, right? But they go in and they'll hire whoever they can hire given, that pool of dollars, right? And I mean, you could look at every business, out there, and for the most part, the person in that seat will largely be at least one standard deviation away from what their true role is, right? So they'll have the title of CFO, but they'll act more like a controller, or they'll have the title of a controller, but they act a little bit more like an accountant, right? And so you're kind of getting what you're paying for there. And what we've said is like, hey, this is a totally different way of thinking about this, where you can take that pool of money and instead of getting one person, you're getting perhaps a team of people or a combination of a fractional CFO and an accountant, perhaps, that together can still fit within your budget, right? But get you the higher level expertise that you need to get, the wheels of your business going, right?
Yeah.
So that's how we think about finite skill set. And then the other thing is the finite talent pool thing. And this is the one I think that's the hardest. to translate for people. But the reality is, and I'll just use, marketing as a example here. But, if you're a really talented CMO and you've done a bunch of different agency work, you've done it for these big companies, and you're like, man, I really would love to apply these skills to these small to mid-sized businesses where I could see the fruit of my labor, where, I'm working directly with the owner, I have more influence, I have more control, right? Getting that person to go want to work at a $30 million, company is hard. I'm not saying it can't be done, but it's hard, right? It's career risk. It's, all the things. And do I really need to be there 5 days a week in order to do that? And so that's where I feel like this fractional model really pops up, is like, hey, if I could work with multiple of these companies at the same time, like that would be invigorating to me. And I would love the continued challenges that I would see as, being part of these different types of organizations, perhaps, and, different ownership structures and different circumstances.
So, I think we see this in marketing all the time, Tamara, and we talk about this where there's different levels of marketers. I think it's a little bit more cut and dry the way you just talked about it, John, in finance, where like there are different job titles. I think in marketing, the hard part about it is that people don't realize that a social media expert is different than a web designer, who's different than, a CMO level person. And so what we've been like really hardcore educating people on is that there are different types of marketers. And I think people understand that an accountant and a controller and a CFO are kind of slightly, or at least understand it on like a logical level. So that's really interesting. I'm going to start using you as an example there. But getting back to like the finance part, because we like actionable pieces here. And so someone listening here who owns a business, I know when I started my first business, I was a naive 20-something-year-old person who didn't know what a P&L was, who got asked to do a pro forma and like just made it up, right? And like a burn chart and all these pieces. And then as I got more sophisticated in my businesses, I started realizing how important seeing the P&L is, how important we now at Clever Cow have a cash flow report that I developed with my team that I can pretty much see my cash flow for the next 7 months. And it's pretty accurate. It's a projection, but it's been to the point where it's really accurate. We can make decisions moving forward confidently, right?
Yep.
My question that I'm getting to is, for that business owner who maybe doesn't know what a P&L, I work with plenty of business owners who have told me I don't even know what a P&L is, right? There's business owners who maybe know what a P&L is, maybe they're seeing it, maybe they're not, but that's basically the extent of how they're doing their financial projections. What are like 3 to 5 things or 3 to 5 numbers that they should be investing their time in looking at on a monthly, quarterly, yearly basis?
Wow, that's there's a lot there. Yeah, well, you asked the finance guy that question, and there's a million different things, right, that I think are really really important. But first of all, you mentioned forecasting. Let me just delineate something that it could be helpful. I think that one of the things is there's a difference between a budget and a forecast, right? A budget is sometime in December, or maybe it's in November, we sit down and we create a budget for what we think the next calendar year is going to look like. Very, very, very important exercise. I would actually stretch that out to 3 or 5 years, getting back to what we were talking about. Like, okay, we're here in 2025. What do we want to be in 2030? And build that roadmap there. And I always call it creating a winnable game. Like, how can we scale this thing? You know what I mean? Well, we're going to need a different office in this year, and we're going to need to scale up our marketing to reach these sales goals, and all those kind of things. But the budgeting process is important, but the forecasting process is also important. We're here in March, for example, right now. We're 2 months in. We should take 2 months of actual results and reforecast the balance of 2025, right? So that in and of itself is an exercise that's very, I think, healthy and helpful for an organization. And as you alluded to, in addition to that forecast, there's a third item, which would be a rolling Usually it's 13-week cash flow forecast. But the combination of those three things, I think, is very important, right? Now, those are separate from the standard financial statements. And the standard financial statements are your P&L or your income statement, your balance sheet, and your statement of cash flows, right? So in terms of the P&L specifically, one of the things that I'll point out is business owners should really look to do some sort of at least modified accrual-based accounting, right? So think about it this way. Cash basis of accounting is what goes into the bank account and what comes out the bank account, right? I'm just recognizing it whenever money comes in and when it goes out, whatever. Now, for some businesses that works, but for most businesses, it doesn't, because it doesn't factor in timing. And I'll give you an example. An example would be a construction firm, interior design firm, anybody that takes deposits in advance, right? You know, if you take that money and you put it in the bank, it looks like revenue, but you may not earn that revenue for the next, month, 2 months, 5 months, 10 months, 12 months. You know what I mean? And so what happens is your P&L looks like, a heart rate monitor. And they're like, I have no idea what's going on in my business because the numbers are so lumpy, right? You get revenue 1 month and all the expenses the next month, right? Mm-hmm. So doing some sort of modified accrual accounting, I think is very, very important. Obviously, you want to look at revenues. You want to compare revenues versus, your prior year and your budget, and know what happened, right? Like if we missed our budget, why did we miss it? There was a delay in the timing of the signing of this key contract or, whatever it is, right? But that's what you call FP&A or financial planning and analysis. That's analyzing the results and saying, what happened? Do we know what happened and how can we fix it? And then obviously you want to pay attention to your gross margins, certainly relative to, your prior year and your plan. And then, your operating margins as well. The one thing I'd add too, from a planning,
like, oh my God.
I know. I'm like, I think we need to put John and he needs to come and be our fractional because math is really hard for me. So I'm just saying.
I'm sorry.
I was thinking about the Excel sheets that I need right now.
Yeah, it's not that hard. It's not that hard. But the other thing on the P&L too that people don't plan for from a cash management perspective, right, is you should always be squirreling away money for your taxes, right? Most business owners are paying their quarterly estimates in, right? But like if you're up and to the right in terms of the growth of your business, your quarterly estimates are based upon last year's tax return, right? And I'm going to make this up, but if your quarterly estimate is $10,000 per quarter or something like that you're supposed to be paying in, and your business is growing at 50%, right? You don't want to wake up at the end of the year and be like, oh my gosh, I didn't account for an extra $20,000 of taxes that I owe. What am I going to do? That kind of thing.
I think anyone listening, if this is giving you anxiety right now, like I think you need to reevaluate how much you're looking at your finances, because the thing that I'm taking from this, John, is that, and I feel like there's plenty of business owners out there, like very successful ones, like Warren Buffett, who talks about like how you should be looking at your bank accounts every day, right? And I think there's two parts to finance here, which is that future and the day-to-day. And I think that small business owners, because I've been in small business for my entire life, they really live in that day-to-day, like, oh, there's cash in the bank account. We can now make a decision. And that is a big barrier to them moving to that next level. And when you look at corporate, they look very far into the future and not as much in the day-to-day. And so I think if we can merge those, and I think that's what a fractional CFO would do for a small business, right, Tamara?
Well, yeah. And I kind of want to add to that, because I don't want to feel like we're being really hard on business owners who like, you should be looking at your accounting and your cash flow every day, because I think like everyone wants to, but then everything else comes up. And that's why it's like, okay, so how do you create a plan in order to make sure that you are doing that due diligence, that work that you need to do in order to be on top of it, to know what's happening with your product, with your growth, with your margins, right? Like we talked about before. and do it in a way, especially if you're a small business owner or you're in the process of scaling, do it in a way that fits in with how you can operate your business, and not let it overwhelm you. So, I mean, I wonder, John, what your advice on that is, because I think, Nicole, you and I are both bringing up that, like, we work with so many small business owners. This is something that they are kind of aware that they need to know, but not every single one of them is on top of it. So how do you create a plan that you can actually implement?
Yeah. Well, I mean, obviously not to, sort of self-promote or whatever, but you can, you always have the option, right, of bringing people in that can help you with that. If that's not your particular skill set, the other thing would be, whether it's online resources or, a community college or something like that, even just doing a basic, introduction to accounting, kind of thing, I think would be helpful, because, these might seem a little bit opaque in terms of the ideas here, but once you get an understanding for, how these things work together, it really illuminates a lot of things. And when people get it, the light bulb goes off, and so, like, I'll give you another example. Like, your balance sheet, right, is your assets and liabilities, and what's remaining after the liabilities is your equity, right, your book equity. But a mistake that a lot of people make is they don't reflect all their assets or all their liabilities on their balance sheet, right? And I'll give you an example. An example would be, you lease a printer for your office, and that you sign up for a 5-year lease. That's $2,000 per month, right? You can't break that lease, right? You're going to expense every month, the cost that's going out the door. But if you went out of business today, or somebody bought your business today or whatever, guess what? You still have to pay for that lease, right? So that liability should be reflected on your balance sheet so that you have a true picture of what, your current financial position is. Same thing would apply to mortgages, car loans, all that kind of stuff. And then the financial statement that nobody looks at is the one that I found to be the most illuminating for business owners when they're looking up and saying, where did my money go? Like, I don't understand where the cash went. The P&L says I made all this money. Where is it? I looked in my bank account and I don't see it, right? Well, that's what the statement of cash flows does, is it reconciles between your income statement and your balance sheet. And one of the things that, we've even experienced, because we've been growing very rapidly as an organization, is that, when you're up and to the right, you got to remember there's a lag between, when you're performing services or you're selling goods and when you get paid, right? And so as you scale up and grow, your working capital is getting eaten away, right? So a simple way to think about it, and I'll use accounts receivable as an example, right? If you started December 31st with $100,000 of accounts receivable, and you ended January 31st with 20,000, you would say $80,000 of cash came in the door, right? Now, the opposite is true, and that's why it applies to a growth case, right? Let's say you started with $20,000 of accounts receivable and ended with 100,000. You'd be like, great, my business is growing, right? The problem is $80,000 just went out the door, right? And when you look at that statement of cash flows, it reconciles what was my beginning cash balance, what is my ending cash balance, and what are all the things that happened in between. And when you look at that, you'll see, like, oh yeah, okay, I get it now. That's because we grew. Or a capital purchase. So if you buy a huge piece of machinery or something like that for your business, right? That's a capital purchase, meaning it's on your statement of cash flows. It doesn't even get reflected in your income statement. But it reconciles those things. And I think if you just understand how those three financial statements work with one another, it will be like, this answers so many questions that, I've been bouncing around in my head. So like I said, I think people can educate themselves. But certainly if, bringing in an outside resource is the most helpful thing, give me a call.
Yeah. I think this is a really good, not just reflection of what we should be thinking about from finance, but it's also a reflection of how we should work with a fractional, right? I love what you said about just even taking a basic course or finding resources online, because even if I'm going to bring a fractional in, right? Even if John, tomorrow I said, hey, Clever Cow needs you, come in, help work with us. I still need to understand enough to be dangerous where like I'm understanding the words you're saying, because there are a lot of terms in finance, and the same thing with marketing, right? You're working with a fractional CMO. We're going to start talking about things like open rates and engagement and channels and all these things that you might not understand at the basic level. And so how can you work with someone on growing your business if you don't understand the basics of what they're trying to do? Now, you don't have to understand how those numbers or how you run that report or how you build the email template, but understanding from a big perspective how that works into your business and how that investment works in, I think is the best way to get the most out of your fractional relationship. And the other thing that you kept saying is cash flow. Personally, I found for me that, and for the businesses I've worked for, that is one of the biggest numbers. Like if you're going to drop everything and just kind of look at your business, the number that helped me make the best decisions was where is cash flow coming from and how is that going to change throughout the year seasonally. So when I'm deciding if I need to hire someone, I think that business owners are like, we have too much work, we have to hire someone right now, and they don't understand how they're going to pay that person.
Yep.
Right. I think that if you're going to like look at anything, for me, it was cash flow.
Yep. And I mean, so there's a term in accounting, finance, it's called working capital. It's basically your current assets less your current liabilities, right? And again, people always ask me all the time, like, what's the secret to, managing, working capital well? I'm like, well, it's actually pretty simple. You collect fast and pay slow. I mean, if that was what everybody did, it'd be easy, right? Because that's a good way to manage, cash, so to speak. But, that's an idealistic scenario in a lot of cases. But it does beg the question of people like, what are you doing to actively manage, how you manage your cash, like your collections, when you're writing new proposals, are you giving people 90-day terms or are you giving them 30-day terms? Are you vigilant on your follow-up? Are your people trained? Are they, do they have good EQ, when it comes to collections and things like that? But so that I just wanted to hit on that real quick. But in terms of what you're talking about, in terms of, how do you be a subject matter expert that might be working with someone that this is not their thing, And I mean, one of the first stories I have of one of our first clients that we brought on board, would be, she was an interior designer. She's still a client today. And one of her talk points in our first meeting was, John, every quarter I go and meet with my tax person, and every time I meet with them, I walk out crying because they don't understand me. It sounds a little bit like they're talking down to me, all that kind of thing. I don't know what's going on, and I feel like foolish, And, my answer to that is like, that is not a good thing, right? And finance people and accounting people in particular are, not necessarily the world's best in terms of like, being a human being first, and then, an accountant or finance person second, right? So I think it's really important, and we stress this a lot when we're hiring here at Third Road, is like EQ is of tantamount importance, right? You have to be able to relate to people. You have to be able to get on their level. And I think that applies to any fractional service.
Yeah.
Because that authentic relationship with that business owner, with that founder, the family, the private equity group, whatever it might be that owns a business, that authentic relationship is critically important.
Well, I think you're really nailing what we talk about a lot, which is a fractional isn't just a contractor. A fractional really takes an interest in your business and comes in as if they are a part of the business with the business best interests, right? And see the whole picture. So, and that would, be seeing that sometimes the CEOs are subject matter experts in the field that, the business is in, and not necessarily experts in everything else. And you have to really know how to help them with their strengths and then fill in where the weaknesses are or where the gaps are. I think everyone really would want to know, bring it back to fractional and what a CFO would do as a fractional for a company. Can you explain a little bit? You talked about the difference between accounting and the comptroller and the CFO, but can you really describe, if someone was to hire a fractional CFO, what are they going to expect from that person, and what should they not expect them to do?
Yeah, that's good. Yeah, I mean, and just to be clear, even here at Third Road, we have fractional CFO services and accounting services, right? Accounting services are everything from the day-to-day transactional stuff all the way through my books are closed and the financial reporting package is complete. And I feel like that's, to answer your question specifically, that's how I think about where the line in the sand is drawn, right? I think a good fractional CFO or a good CFO in general should be focusing on strategy, finance, operations, right? What do the numbers mean? What are they telling us? Where are we going to go with them, right? So that's really, really important. The other thing that I talk about a lot is I think a CFO's job is to be dangerous enough to know about the other areas of the business, because I need to know when I need to pick up the phone and give you guys a call, right? Or give a CTO a call or a human resource person or whatever. And the way I talk about it is, if you think about a business being a wheel, right? In the hub and spoke model, I kind of see the CFO's job being, in the hub portion, because if you branch out to the other spokes of a business, whether they be marketing or human resources or logistics or, whatever it is, everything has dollar signs on it, right? And in order for that business to work, in order for that wheel to move as fast as it can, we need to allocate those dollars as efficiently as we possibly can to make them all work, right? Mm-hmm. And so I think a good CFO or a good fractional CFO should be well informed in all aspects of a business. And we do a ton here with respect to training. We have some proprietary tools that we've developed that are like, think of it, we call it the 360-degree view of the business, or the equivalent of a 180-point inspection on your business, called our Business Accelerator. And it basically puts a business through the grinder of like, tell me about your plan for if business owner gets hit by a bus. What happens? Oh, I didn't think about that. Well, what if it's a partnership? Do you guys have a buy-sell agreement in place with one another? Never heard of a buy-sell agreement. Okay, you know what I mean? Like, so there's all things with continuity planning that we're going to hit on. There's things around marketing, what's your sales process, IT, everything. And it's intended to flush out ideas, right? And I think anybody that's looking to hire a fractional CFO, if they're just doing accounting work, then I think there are other alternatives out there. And what you really should be looking for are people that are going to be bringing you meaningful and insightful ideas to help your business accelerate forward.
You made you've made a lot of good points, but one of the points that I want to hit on here is that as fractional work is fairly new in this industry, and we talked about this before we even jumped on, John, about how fairly new people are just now starting to really accept fractional and understand what fractional is. I know I've seen this in the marketing space where marketing agencies are line iteming fractional CMO work. And then when I talk to a client and say, okay, when was the last time you had a strategy session with them? They say, oh, never. Or like, why are you running this campaign? It doesn't really fit your buyer personas. They say, oh, well, the company said we needed it. And when they have a line item for fractional CMO, they're not really being a fractional CMO. And so I think as the industry expands, yes, I think it's going to help a lot of small businesses. And I've been saying this is why Tamara and I started the show, is that fractional is going to help the small business world and the mid-sized business world a lot, because you can get these expertise. You can think about your business in a big space, unlike ever before. And we can really talk about going from a small business, Main Street business, to a scalable organization, but also you're going to find these people who can realize that they can charge more by saying they're a fractional whatever, and then not do those pieces. So if you're not talking strategy, and it sounds like in CFO world as well as CMO, if you're not talking strategy, if you're in the weeds with your fractional and you're not up here looking at the next 5 years, looking at why, if they're not explaining to you why we're doing certain things and how that's going to get you to your goals, and you're not talking about metrics or KPIs, you are not getting fractional services, or at least that's how I feel. Do you agree with that?
Yeah, absolutely. I mean, going back in time, I always say this very delicately, but when because I don't know that I fully take credit for it, but rewinding the tape to 2015, when I started the company and I started developing the website, I was really trying to wordsmith what it was that I was doing, and I was like, I don't want to be in the same category as these outsourced accountants.
Mm-hmm.
I don't want to be. I hate the word outsourced. I'm not using the word outsourced. I'm not using the word consulting, because consulting feels like statement of work. You give me this, I pay you that. That's not what I was doing. I was an authentic member of this team, and I was scrambling to find the right words. And I literally say this again with a bit of trepidation, but I use the word fractional CFO, and I'd never heard it before. I'd never heard anybody use it before. Fractional anything, really. I think there were people that were doing stuff similar to it. But I wanted it, my involvement or not, what I wanted it to be was something that was very distinct from temporary placement or attempt to hire or a permanent placement or any of these other categories of things, outsourced accounting, all those kind of things. And I use that word, and I would say for the first 7 years, it really didn't. I mean, we grew, but it really didn't take hold. And what you've seen now in the last, I think, 3 years is all of a sudden it's very topical. It's very, there's a lot of buzz in the air around it. And what I keep on saying is, when you look at the people that the buzz is coming from, it's all the people that are kind of in and around those businesses. So the lawyers, the tax people, they seem to get it. Bankers, insurance people, wealth advisors, they seem to get it, right? They're like, oh, this is a great idea. The adoption rate is still tiny. And the example that I always cite was when I was back on the front porch and I was like, man, I feel like this is a business. And to test that hypothesis, I had a marketing firm do a little data scrubbing. And I said, okay, between, 25 miles from my home, how many organizations are there between 2 million and 40 million of revenue? And they came back with the list, and it was 15,000 different organizations, right? For profit and nonprofit. And I'm like, that's it. That's it. I knew that they're literally everywhere. And that's just within 25 miles of my home. And you start to think about the number of businesses in the US, across the country. I mean, it's in the millions, right? And I think the size of businesses that could benefit is way different than what I thought it was back then when we were kind of looking in that 2 to 40 million range. Now we're, 100 million to, hundreds of millions, that I think can benefit from it. So I think in terms of the size of the opportunity, it is literally limitless. But the adoption rate is still exceptionally low. So I feel like we are on the frontier of what's going to be a incredible run. And I think that one of the things that's going to shake out from that, to get back to your question around what is fractional CFO work, we've been very clear on how we define it. But I think what you're seeing out there, not just in CFO world, but also in CMO world or CTO world or whatever it is the market hasn't clearly defined exactly what it is yet. Mm-hmm. And so if you're a business owner, I would definitely be testing the hypothesis of what is it that you're really getting, because if you're hiring a fractional CMO and all they're doing is managing your social media, that's not where you're going.
And I would even say for me, like the difference between, and this is more of like a feeling thing, the difference between Tamara, you tell me, I think you're in the same boat here, between a consultant, a part-time, and like a fractional is not even the type of work or the work that's happening. It's even how they talk about their clients, right? So a consultant says, I have a client who does this. Me as a fractional and every other fractional I've ever met says, oh my gosh, so I have this company, or I work at this company, or I have this team at this company. And they talk about it like it's their own because they truly are invested in the future of what that company is doing and the outcome. And so they're, even though they're not there 40 hours a week for 52 weeks out of the year, they are invested as an actual team member. And that's how I talk about it. And so often people are like, oh yeah, you work at that one company, and they don't realize I have, you know, my company and 5 other companies here that I also feel the same way and talk about. And I've heard Tamara talk about her clients the same way. And I hear you talking about your clients the same way. And I think that is a major difference between a fractional and a consultant, honestly.
Yeah, absolutely. That's why we kind of avoided it from the beginning, is that we didn't want to get, I think there's nothing wrong with being a consultant, but I think it invokes this idea of a transactional nature of a relationship where it's like, again, I'm going to pay you this and you're going to give me that. And it's project based, right? It's not being a member of the team, right? And so
sometimes even hostile because you're going in and you're doing, you know, I know consultants can get a bad name.
Yeah, I don't think it's bad. I just think it's different, you know. And what I was trying to do, you know, then, and what I continue to try to do now is like, you know, just continue to try to differentiate. You know, we talk to our team all the time about the importance of authentic relationships. Being on site, you know, is really important for us. That's not necessarily for everybody. We do have clients, I think, in 14 states, but the lion's share of them are in Chicagoland area, and our people are mostly in the Chicagoland area to develop those kind of authentic connections. It's not 100% of the time, but, you know, we like that. But yeah, you know, with the clients that I work with personally, I am involved in every area of not just their business, but their life, you know?
Yeah. I bet they introduce you as their CFO. Like my clients introduce me as their CMO or their director of marketing. Like you are, you know, John, there are so many topics we didn't hit on. We did not hit on, you know, how do you fund your business? How many different ways to get capital? We didn't talk about things like how AI is changing things, but we are at time. So we're going to have you back on because you are truly what this show is all about. And we don't get the chance to speak to a lot of really amazing fractional CFOs. So we're definitely going to have to bring you back on. We'll have to talk about these other topics. But if someone out there is listening and they said, I need John's help or John's team's help, how can they reach out to you?
Certainly our website is thirdroadmgmt.com. You could reach out to us that way. There's a little, you know, connect with us button, you know, certainly on our website. You could follow us on LinkedIn. You know, we try to be helpful in terms of providing content there. And not to put a shameless plug in, but I also do an entrepreneurship podcast called the Drive-By Entrepreneur Podcast by Third Road Management. It's largely with founders and learning their stories and how did they get here and all that kind of stuff. I find it to be more inspirational for people than it is technical. But anyway, if that's helpful, you can check that out as well. But yeah, happy to talk to anybody and everybody anytime, any day.
Well, Tamara, maybe we'll get invited to come talk to John on his podcast. Just saying, just throwing him out there. No, but thank you for joining us, John. Thank you for all your knowledge. If this conversation made you anxious, reach out to someone like John. The numbers in your business are so important for growth, and we cannot do any of our jobs as CMOs or CTOs without the help of a great CFO. So make sure you're thinking about this, people. Also, if you have not subscribed, if you have not joined our newsletter, if you are not getting our updates on LinkedIn and all the other places, please do, because we are dropping amazing knowledge like this every single week. You can see us at speaking events. So go to our website and check out our events. And Tamra, see you next week.
See you next week.
Yes. Thank you guys so much for having me. It's
Thank
been
you, John.
yeah.